If you have a $250,000 tax bill every year, you're going to invest that amount of money into a deal. So rather than depreciate that asset over 39 years, which is standard straight line, you're condensing that. And then we'll apply it to our deals and stuff, but we're getting that bonus depreciation.
Sale just. Portrait.
Yeah, we talk about that, the roadmap, right? And you're going through that roadmap of getting to that first deal, and you're at stages, Paul, you've onboarded, you're coming through, you're setting up that website. And maybe if you haven't done that yet for the CRM, the website, how many of you have your websites done? I know you guys do. I know you guys do. Okay, perfect. Chad, I know you just came in. I think everybody needs to understand this. The part of raising money is so critically important is people need to trust you. They need to like you, right? So the deal can be the greatest deal on planet Earth, but if I don't like you and I don't trust you, it's going to be very difficult for me to give you any amount of money, whether it's 25 grand, 50 grand, 100 grand, doesn't really matter. So part of that process of getting people to trust you is setting up some of the back end administerial. So that way you look officially official. And whether that be your CRM system for the investing, the website, you know, you have one, you're a realtor, right? Right. So you have a real estate website, right? If somebody wants to have you sell them their home, they need to know who you are. They need to trust you, right? Because there's 400 million realtors. I used to be one. I still am one technically, but we're a commodity. For me to choose you versus you is not because I think you're going to help me sell the home better. That's like a facade. Or that I think you can find me a better home. It's that I like you and I trust you a little bit better than the next one over there. And that comes by having an online presence. And people need to know who you are. Same thing in the investing world, right? You don't have to have a big one, and you don't need to be some guru influencer out there all over the planet, but you need to have some presence to where if I want to learn who you are and learn about your company and what you're doing, I can go to that website and learn, right? No different than any of you did with us before you considered even coming into the community of the program. Right? It's the same process. So we're going to kind of walk through that today. I know many of you have that set up. A lot of you don't, and that's kind of what I want to walk through that. And then we're also going to call some brokers this morning. So we're going to pick some areas and just randomly call them. And I'm going to role play with them live here this morning and go through that. And then even set up some appointments. And then I want to go through with each of you kind of after this first hour with everybody that's on here is we're going to go through kind of exactly where you're at to help you build some momentum in getting that first deal under contract, right? That may or may not be there yet. So we'll go through that. And then after, which, you know, our online guests, you know, you guys won't be able to see this today. So we're going to visit 2 deals over the next 2 days in the afternoon. So after this, we're going to be getting together and driving down to National City. And we have one of our deals down there that we're done renovating. So you won't get to see it in the middle of reno, which kind of sucks. I wish you would have been able to see it like halfway done. But it's all done, and now it's in the stabilization phase. So we're getting ready to refinance that thing, pull the cash out, pay back investors, and then we're gonna hold, you know, moving forward. And that's an 80-unit apartment complex that we bought in December 2022, and it was a home run. I mean, and it came right after. I heard you talking about what was it? Walking away from a deal. What were you mentioning, Tony?
You never get hurt by walking away from a deal.
Right. So yes, and that is technically true. It could still be painful, right? It could still be painful. But yes, walking away from several thousands or thousands is a lot less than millions, right? And to speak on that, how this deal in National City even came about was because of a deal we walked away from in Texas in October of 2022. It was a 200-unit, $33 million apartment complex that we were in escrow on. We went into escrow in April of 2022, right before the Fed decided to have their fun with the interest rates and go up. I mean, we knew they were going to go up, so I wasn't naive, but not 11 times in 9 months, right? I mean, that was a bit excessive, right? And everybody's still feeling it today. So back then, the market was still hot enough to where in order to get a contract, you had to have non-refundable deposit money up front. So we had $500,000 from day one, non-refundable. So if we went in and did our inspections and we didn't like it, unless there was something specific about that was a lie or we found out that was part of the reps and warranties, you know, we couldn't just back away, right? So you do a lot of due diligence up front, and we've done everything. Great property, we'd walked it 400 times, and we knew that thing really well before we went into escrow. The property was not the problem, and the location, everything was beautiful. Like, property's in good condition, 1980s, Class B, great area, great neighborhood, great schools, great rents, great everything. The problem was the financing, right? We went in with interest rates being at 4.25, and before we decided to walk away, 6 months later, by the way, 6 months later in escrow, it was at 9.25 on the interest rates. And at that time, it just wasn't going to make financial sense. And so push came to shove. It was in October of 2022, we'd tried and tried and tried, but we were going to be fitting a square peg in a round hole. And, you know, at that time we had 800,000 hard because now we had 300,000 of due diligence money. And it wasn't just us. We had two other partners, so a total of 3 people. So when I talk about OPM and general partnerships and co-general partnerships and all that stuff, we were a co-general partnership with 2 other groups and us in order to take down a $33 million, 200 and something unit complex, beautiful complex in Texas. So you don't do that alone. Very rarely will you ever sit there stroking checks for, you know, $12 million in cash. So that was the down payment, right? That was the equity in. And obviously we didn't have all of that. We brought in some of it, but then they brought in the rest, and then we raised from investors the rest of it. But all of that money, the 800 grand, so we do not risk investor money until we're getting ready to close. So that was all of ours, right? And that's the difference, because yeah, we don't do that. Even though we raised the money, it was getting, half of it was in the account, half of it was coming in. We do not put that at risk with our investors until we are ready to close, because in case something like this happens, the last thing we want to have happen is, oh, we didn't close on the deal and I can't give you your money back. I mean, could you imagine that conversation? And then the lawsuits to follow? It would not go well. So yeah, or you're in a hole, like with a shovel and some sand, right? Something like that. Yeah, took us 2 weeks to kind of think through it. And yeah, then I ended up waking up one morning and I said, you know what? Can't do it. I can't do it. I can't put a square peg in a round hole. I'm not going to force feed and risk $12 million of investor money. You know, we're going to very painful decision to walk away from that deal. And while it was a very painful financial experience, it was hands down the best business decision I've ever made. Because of the way we handled that, the investors saw that we took it in shorts pretty good, but protected them. And 90 days later, the deal you're about to see this afternoon came to us completely off market through the family's attorney. So this family that sold us this deal, we're in line for their other projects here in San Diego. They own about 900 units in San Diego. And it's a very wealthy family that the husband died. We got Dallas, Texas, Mr. Johnny. Atlanta, Georgia. Okay. We could probably do some of those. We'll flip a coin. So yeah, let's do Nashville. And then let's also do Ohio. Let's do Ohio. It doesn't have a lot of information on this thing. He's got a little flyer. 22 units, been on 30 days. Oh, 134 days. Never mind. Take that back. Occupancy. Okay, gotcha. 1964 build. Looks like some basic renovations in there. Hey, Beth, can you hear me?
Can we help you with something?
Yeah, Beth, can you hear me okay?
Sure, can we help?
Yes, no, I'm making sure. Can you hear me okay? My name's Justin Brennan. I'm calling on one of your guys' apartment complexes, on Beth's apartment complex. I was actually coming off of Crexy, yes, and I was looking at the one on Brooks Park Drive in Toledo. Okay. Yeah, so it's been on about 41 days. Can you tell me a little bit about that complex?
I can have Beth give you a call. And you are Justin, B-R-E-N-N-A-R?
B-R-E-N-N-A-F.
Great. I will get Beth a call and she can handle all your questions.
Awesome. Appreciate it. Thank you.
Thank you for calling. Bye-bye.
Well, let's try it out on. Well, I think that what they're doing is they just have a placeholder price in there. That obviously doesn't make much sense, right? So let's take a look at KWs here. So we got Columbus, Ohio, Mr. Jeffrey. Let's see if this goes to his cell phone versus office here. Let's try that. And let's give this one a call. He's got 57 days on market, 1.5 million, 16 units in Columbus.
Our SIM flag your phone number.
What?
We apologize for the inconvenience. To reach us, please either send us an email or call back from a different phone number.
That's a first. So apparently I'm spam now. Hold on, we're gonna try that again. That doesn't make any sense. I think it's getting me to his office, which I was trying to get direct. Let's try Rose calling back. Shoot, I should have grabbed that. 15 unit. Is this gonna be the same one? Let's see if it's the same agent. Taking me to their office. No, we got Kyle. It's gotta, yeah, one of these guys got to pick up. 513. 520 3540. It's looking a little rough. 119 days on market, 1,000,005. OM there, 15 units.
Your call has been forwarded to.
Try another one. 40.
Hello, Beth Rose.
Hey Beth, this is Justin Brennan. How are you?
Wonderful. How are you?
Doing good. Yeah, thanks for calling back so quickly.
You're welcome.
Yeah, it was obviously, now understanding obviously an auction, but that's great. So that's the bidding the start price.
Yeah, and the bidding is going to end today at 4 o'clock Eastern.
Okay.
Can I email you the due diligence package so you can get your eyes on that right away?
I can. Yeah, I appreciate that. I think they took down my email, and I can give you another one as well.
That's fine. Yeah, that will help me. I'm not at the office. I'm
Got it.
actually
Okay.
doing the action. What is that?
It is Justin, Justin,
Yep.
and then it's BrennanPoley.com. I'll spell that for you. It's B as in boy, RENNAN, and then Poley is P as in Paul, OHLE.com. And yeah, so I guess, is it foreclosed on auction, or is it just a decision of the seller to sell it this way?
It's not one of my foreclosures. Have you been on my site before?
I have not, but I was going to it. Yeah, that's why I pulled it up through.
Your auctioneer. Yeah,
Yep.
I do a lot. I do the foreclosures for the government insured loans in Ohio.
Got it.
So I get the best flips in Ohio. But no, this is a non-distress. This is two sellers that live in New York, bought these units. They're very well managed by KLM. Do you know who that is?
I do.
Florida, New York. Yeah, they're pretty big. I'm pretty impressed with them. When I email them, I mean, within 2 minutes, I have anything I need. It's unheard of.
Yeah, so the financials and all the DD.
I got it all. And that's what I'm going to send you. You will see in the photos when you go to my site, I'm going to send you the direct links. Every time somebody moved out, they went in and gutted the place. So white kitchens, white baths, laminate wood floors, paint, white wood. So you'll see you've got the white kitchens, which are the newly rehabbed. The tenants there have been there a long time. They have the oak kitchens, which is fine. But you can tell the difference. Very cute. I think he's only got 3 right now out of 40. They're really great, actually.
Is it a cash requirement, or is there financeable?
Oh, it's financing.
Okay.
Yeah.
And when you because it's, like you said, it's not being foreclosed on. It's just being sold this way. Obviously, they have I'm guessing a reserve price.
They do.
Okay.
It's subject to their confirmation. I have.
Sure. Got it. Okay. That makes sense.
But yeah, no, these are. Do you know anything about Toledo?
We do. Yeah, we've been up into the Columbus areas and around there. I've not specifically been to Toledo yet, but yeah, in the Ohio markets quite a bit.
Yeah.
Cleveland and all.
And, oh gosh, I get Columbus, I get Cleveland. You gotta, when we get off the phone, you'll have to download my app.
Okay.
Just go to your app store, it's a free app. Just type in Beth Rose auction. I get Cleveland, Columbus, Cincinnati. I get it all. And I post new auctions every day. And then I just signed a contract in September. This winter, I have an additional 200 a month coming. So, yeah, and most of these are insolvent estates or fallout from the pandemic, from the forbearance. That's what they are. But this one, it's a Washington local school system, which, every area is driven by school system. This is in Washington local, which is a suburb school. It's not Toledo public, which is good. And that's when we advertise something, we're like, oh, it's in Washington local, because that's really all people care about is the location.
Yeah.
This is right at the Toledo-Michigan border. I could throw the ball to the Michigan border. So it's in a really good location. Yeah.
Well, listen, as long as you'll take me to a Notre Dame game over in South Bend, which is not terribly far from
It's
you,
not far.
we're good to go then.
You would go to a Buckeye game?
I'm a Notre Dame guy. It's the school I didn't go to that I wanted to go to, but I don't think they would let me in. It is nice. Okay, well, yeah. So, yeah, whether this works out or not, but obviously I have your info down because, getting access to, what do you call it, pre-market stuff, pre-auction stuff, whatever it is. I mean, we're buyers, and we got a lot of other folks in our pool, so we'd love to do some business.
If you want to contact me, call me. This is my cell, obviously. I'm great about answering my phone. But if you call me the day before an auction ends and ask me my plaintiff instructions, what the bank bid is, how you win these is that number. It's not illegal for you to ask me that. As long as you're $100 more than the bank and you hold your breath that nobody bids against you,
sure,
that's how you win those.
Yeah, so on the reserves, in this case, being a reserve price one, which is fine, I call it your whisper price, your price guidance. I mean, are you able to disclose that or not at this time?
I can. No, of course. I've been selling real estate for 5 years, so you can ask me any. Yeah, I'm conservative, so I am not, you're not paying retail for anything to talk to me. I'm more on because I work with investors like you.
Well, yeah, because we syndicate our equity, right? So we'll come in, let's call it whatever the number this is, we'll pull down a 65%, 70% loan. We'll bring in the rest of the equity. We're bringing in a good portion of it. And then we have our investor pool that we already have set up, and we'll bring in the rest of the equity. So yeah, it's got to make sense, right? And get into at least
That makes sense.
the teens on an IRR, and we can usually take it down.
So here is the conversation I had with the civil, and I'm being conservative. So when I comped these, I comped them at a fee a door. However, last week there was a unit that came for sale, 6 unit on Brook Park, that is $57,500 a door. And then there is another 6 unit that came on the market, not even a month ago, I would say, call it 3 weeks, 96,000 and some change a door. So I was like, yeah, pretty reasonable. There's a 10 unit that went on the market about a month ago. I don't know if it's still available, but it was over by Toledo Hospital. It was in Toledo Public Schools, not suburb school. That was a 10 unit, 55 a door, and then there was another 6 unit for 55 a door. So use that guidance to your benefit. So there you go.
Okay, fair enough. I appreciate
And
that.
that's conservative, yeah. So that's where my head was.
We're for lender. So last 2 questions. Number 1 is, are there decent property management companies in that area that other clients are using currently that you may provide a list of?
Yeah,
Okay.
it's a slim list, Justin.
I know. I know. That's why I was tactful with my language there, because I know how challenging it could be.
Well, it's just who the good and the bad are, and I do have a couple I give you. They're very good. I work with people like you all the time. Sometimes I've never, I sold 67 houses to a guy from Oregon that I never met him. Boy, we talked on the phone all the time. We knew everything about each other. And another group, about 100 out of Salt Lake City. No, so I don't put you in a bad position, but yes, I could probably give you 2.
Okay.
That'll give you a good.
Yeah, and then we'll go through our process of vetting them, right?
Yeah. Oh yeah. But there's probably a half a dozen in
Okay.
Toledo, but I'll give you 2.
Okay. And then on the lending side, are there local regional banks within the Ohio market that would lend on smaller deals like this?
I do. I've got a really good guy on this one. I've already talked to him about it. And he'd be in excellent hands with him. Good. He's smart. He's aggressive. He already knows this property. So
Since it's pretty stabilized, would you are you probably looking in the mid 6% range on debt right now for something like this?
with the rates, probably.
Yeah.
Yeah. I mean, somewhere between 6 and 7 in there.
Okay.
Yeah. Where are you located? Are you San Diego?
Currently in San Diego. We also have an office in Texas, outside of Austin, so we're back and forth between the Midwest. We've purchased stuff all up and down the upper Midwest and Kansas City and so forth. So
Yeah, I am getting ready, and I'll put this bug in here. I'm getting ready to go national. And so I've been working with 2 attorneys, and that's going to happen probably late winter. All 50 states, foreclosures, and one of them is the Cherub High. There's 65,000 that property is coming through the pipeline. Everything's on the back burner right now because the government's kind of a mess. And
the government's a mess, Beth? No.
well, I mean, I'm not.
I thought they had all their stuff together.
Let me just rephrase that. I'm not their priority.
So let me ask you a question. Do you get in? I mean, I know you sell all this stuff, but please tell me you're investing with your investors sometimes. You can't? Because it's the fun stuff. It's the federal.
It's the federal. I'm vetted. I sign your deed. I am the seller. And so trust me,
There has got to be a workaround, Beth. I mean, I would fire myself if I couldn't do this. If I had access to all these things and I was not involved in them, and somehow, holy crap.
I have made these guys love me. Got Cincinnati to buy. They're like, oh my God, Beth, we just made 70 grand on a flip on this one and 110 on that one. Oh, yeah, I get them. I get the good stuff now.
Okay. All right, well, we'll figure something out.
We'll figure something out, Justin.
All right. I'll look for your email. I appreciate that.
Right now. Yeah.
And whether it's this one or future ones, we'll see what we can do.
There's a ton of them.
Okay. Thank you.
All right. You're welcome.
All right. Well, that was fun.
Right now.
How interesting was that phone conversation?
Yeah, interesting.
That's actually one of the better calls I've had with a broker.
We give out her cell number.
Well, no, that's what I was going to say. Well, first of all of you should have that, and everybody online. She's gonna get like 400 phone calls from all of you. Hey, I'm in multifamily school. Do you have some foreclosures? So everybody online, be tactful. You can get her number here. You all have it.
By the way, Toledo is supposed to be the hottest market in the U.S. next year.
Oh, well, we all like hot markets.
Average credit score.
So here's Miss Beth Rose. You see her number right there. So once again, she has lots. So this is clearly a great person to have connections with. And whether it's in Ohio or other parts around there, you already heard her, she's going to be going national. So very interesting. And if she's representing these foreclosure Fannie Mae, Freddie Mac, HUD type loans, that's what she's representing, then it's government stuff. So the great news is the government's very inefficient with their money, and they'll sell things when they get best buyer, not necessarily the best price. So very interesting, great conversation. So I would stamp mark her and slowly reach out and have conversations.
What was your app?
She said go onto the app store, and she has her own app called Beth Rose.
Beth Rose Auction.
Beth Rose Auction. It's Beth Rose Auctions. Yeah, so follow it there. But this is a great broker for the Ohio market and probably other ones.
How is the buying procedure different on an auction compared to just put a PSA and it's
Yeah, so you're not going to have contingencies.
There's no.
Yeah, so here's how it works, which is great you're bringing this up. So with auctions, I asked the question, could it be financeable? You heard that. So yes, it can. So that's helpful. So you're not having to be all cash on these deals. So you could come in, but you're going to need to move relatively quickly. That's why they have a lead up time, right? So this thing probably started, 90 days ago, leading up to the auction date, which ends tomorrow. So there's a run up to that period, and people are putting in offers. It's pretty dumb to put in an offer ahead of time, in my opinion, because they'll leverage it against each other. That's just what good brokers will do. Like if I came in and, she said, let's call it $50,000 a door for 40 units. That's $2 million, right? Is that right?
Mm-hmm.
Yeah, that's $2 million. So let's say it was $2.5 million, hypothetically for a minute, on 40 units. And that was my price. And I would just back into that thing to see if that made sense. But it's going to be somewhere between $2 million to probably $3 million, I'm guessing. Because she just gave me the indication of somewhere in that $50,000 to $60,000 a door range, based upon what she was saying. And that you can always ask that. So if there isn't a price on a property that you're looking at, this is why we're so adamant on setting up the pre-stuff in your business going into it. This is why we set up the CRM, the website, all of this stuff. And then you start building in your list of 25. So inside of your CRM, you have a list of 25 people, Christine, and you can show her this list of people. And you can show them that you have a website. And you can show them that this isn't your first rodeo. You can show them that you have strategic partners. You can show them that, you actually are alive. Right? I mean, that's the whole point behind doing the front end stuff, is so that way when that question comes along, you can say, yeah, actually go to my website, check it out. They're going to actually read the story about you. They're going to see that you have strategic partners. They're going to click on those links. They're going to see us. They're going to see everything we own alongside with strategic partnerships. Then they say, hey, what's kind of your investor database look like? You can technically show them your 25 people inside your CRM, technically, but they're going to get a good vibe from you simply by going to those things in advance. It's like anything. Everybody's on edge until you do the first deal together. And then you're like, okay, this worked out. Now I don't think you're lying all the time. That's basically how it goes. But everybody's going to be on edge the first time you do it, right? So, yeah, you're welcome. Yeah, I hope this was helpful. That was fun. I wanted to do a lot more calls, but this Beth one was just so good. I could talk to her for like an hour. We could get through all of the Q&A. All right, everybody, I'm going to shut down the online. Everybody want to say hi to everybody real quick before I'll stop sharing so you can see everybody's shiny faces. Then you can wave. Everybody wave at each other. So we're live here in San Diego. So we're going to stay classy today. Stay classy, San Diego. Yes. Beautiful. All right, everybody. Have a great rest of your Thursday. We're going to sign off online, and then we'll keep going here inside. So next time for sure. Cool. Bye, everybody. Cool. Now let's get to real stuff. But yeah, what I was going to touch on is going through this roadmap to where you don't have a deal, you're coming in, here's where you close on your first property. The business in a box, because people want to know, how do you raise capital? How do you meet people, right? How do you find good deals? Because that's the two biggest hurdles most people get stuck with. And I let them know, well, in order for you to actually get brokers to trust you, in order to get investors to trust you to give you money and brokers to give you deals, they need to know who you are. In order for them to know who you are, they need to be able to find you with some presence online. So that's why this back end side is so important to get set up. So that way, when you go into the market, to give you a perfect example, like when I just met with Johnny and the brokers in Dallas, Texas, for us going to coffee and sitting down with them and having a few moments with them and having some brunch and whatever it was, they said, a lot of investors don't do this anymore. It's really nice that you guys are. So he sent Johnny 3 deals right after lunch with opportunities simply for having lunch, because not a lot of people are making those connections. Everybody's trying to do everything so virtually, which is fine, but it's still a belly-to-belly game. It's still a human connection. It's real estate. That's the beauty of real estate, is it's physical. We're sitting in it right now. the person that owns this space, Corinne, who I know, they're making money off of this real estate because that's its beauty. That's the beauty of it. So setting up this business in a box foundation is really critical. Website, LLC, backend, CRM, having the organization there so that way you're officially official. And then going into the market, taking the 3 days to travel out to whatever market you're focused in to get on the ground, tour the neighborhoods, know the areas, know what's going on, know the rents, know the good areas and bad areas, where to be, where not to be. All of that stuff's critically important. And then meeting with a few brokers, meeting with a few property managers, meeting with a few lenders to get the team set up. So that way, when deals start flowing here, which is finding, analyzing, writing offers, and you actually get deals locked in, well, now you're not catching your tail trying to figure all this out. Because if you're having to figure all this out while you're getting deals flowing in, the deals aren't going to happen. And then you're going to get into the cycle of frustration. So that's why now you have all this set up, and now you're finding deals, analyzing them, writing offers. And you're pretty much in this cycle the entire portion until that first deal pops, right? So you go from, the broker outreach, the deal underwriting, writing the offers. Obviously, you had your market trip set up, laying the foundations of capital. When I say capital, people always wonder, well, do I need to wait for the deal to raise the money? And the answer is no, but you need to set up what's called soft commitments. But you can't get soft commitments without your business in a box, because the first thing people are going to do to give you some sort of hey, yeah, when you have a deal, I would love to take a look at it. Like that whole conversation that could be happening right around holidays, which is right now, that is hard to get if they go and try and find you and they can't. And or if they're trying to learn who you are, and then, you're some, W-2 that doesn't have an actual business set up. Like, you are officially a multifamily investor. It's not a hobby. Like, if you're going to go, we got to commit and we got to go. And sure, it's a side gig in the beginning until it takes over the primary gig like everybody wants, but it's official business and you're running a multifamily investment company. And that needs to be the mentality, because that'll allow these soft commitments for the capital foundation to get in place to where you'll have your list of 25, 30 people that are in that database that are soft committed, warmed up a little bit because they've had the time to go through this pre-stuff with you, to where now when you're in negotiations and then you get a deal under contract, you're technically not chasing to find the money because this is all warmed up, ready to go. They just need a deal to commit to. Make sense? And that's how the raising capital. So that way none of this is set up and then you go ahead and get a deal under contract and then you're like, shit, I can't raise the money. Well, no wonder you can't raise the money. All this was not in place. So that's why it's really, really, really important that this kind of be followed, because it's going to allow this process when you get under contract to happen. Great example would be the most recent one, Julian, right? He from Michigan. I mean, this is crazy. He's living in Liberia in Western Africa right now as a diplomat for the United States government. But his first deal was in Michigan. He locked it up. He's from Michigan, so he was able to find it. But all this stuff was set up within 2 weeks, right? He met a few brokers, started getting deal flow. He already knew the market, so he didn't have to go into the market and do the trip. But then he started reaching out to people because all this was set up. He got 25 to 30 people in that list with soft commitments, started writing offers, negotiating them, locked up his first deal. And because this was all set up, he raised 3/4 of the money in 2 weeks. I mean, it was only about a take that back. Yeah, a little under $500,000 raise, right? So not a grip of money, but not a small amount of money either. But 3/4 of it was raised within 2 weeks when he's getting ready to close on it because all this foundation was set up. And then I asked him the other day, I said, what is the number one thing that helped you in solidifying the capital once you did all this stuff and reached out to people and sent them the pitch deck and the deal and all the information about the deal, and you sent it out and you set up the phone calls and you had the conversations and people said, yeah, I'm interested or I'm not. Like what really got over the hump? And he says, honestly, follow-up. And you've heard the saying, fortune's in the follow-up. Fortune is in the follow-up. He says, I never felt like I was asking people for money. He says, you got to change the mentality. You're not asking people for money. You are providing them an opportunity. You have to flip it the other way around. They should be honored to get this opportunity to go make 15 to 20% a year on their money and wipe out their income taxes for life. Because that's essentially what you're giving people. And you're just giving them a great deal to invest in. So it's an opportunity. You're not asking people for money. And I never ask people. I always say, who do you know? Who do you know that may have interest in this opportunity? Because what'll happen when you do that, and then they're like, I don't know, man, but send me the information. Okay, perfect. Send you the information. They get to look at it. What's going to happen is the FOMO is going to set in, and they're going to go, damn, why didn't he ask me? I mean, I know this Brian guy, I'm going to send it off to him for him, but why isn't he asking me? I think this is pretty interesting. And then he's going to follow up with me. And all of a sudden, I'm going to say, oh, why didn't you ask me? I have some interest. I have 25 grand I can throw at this thing. Seems pretty cool. Okay, great. Yeah, in the back.
So I got some high net worth doctor friends.
Yeah. Oh, these are beautiful. This is
I
great.
just want to know how to explain to them how I can, have put their money in, but also reduce their tax liability.
Okay, so the answer to that is they're going to get, because of the big, beautiful bill that's in place now, it's nearly what's called 100% bonus depreciation as of today here in 2025.
Yeah.
What that means is whatever I invest, let's say I invested 50 grand with you, I get almost a dollar for dollar write-off. So, most of it comes in year one. So if I wanted to wipe out a $50,000 per year tax bill to the IRS every year, then I would do one of these every single year and invest that money, get what's called a negative K1, right? That's what comes through from these investments as a K1 statement. And then that goes to your CPA. Now, depending on how you and maybe a spouse, if you're single and all that kind of personal stuff, that'll dictate whether you can wipe out capital gains, right? Which is investment passive style income, or your ordinary income from your job. So give you a perfect example. There was a doctor in New York. He and his wife, obviously married, they joint file together. She's a stay-at-home, but she also has her real estate license. When he told me that on the phone, I'm like, oh my God, you're in a perfect scenario. Because he pays almost $250,000 a year to Uncle Sam. And he's like, I'm sick and tired of paying this. I said, I don't blame you, right? And you're in the state of New York too. So you're getting hosed 3 ways to the moon. So I said, here's how we're going to wipe out your taxes for life. Your wife, she has her real estate license. So now she's a real estate professional. You guys joint file. You're going to go buy some multifamily, whether you buy it on your own or you invest in a syndication with any one of us, whatever you invest. So if you have a $250,000 tax bill every year, you're going to invest that amount of money into a deal. You're going to almost get a dollar for dollar negative K1 statement every single year you do this. And you're going to pass that back to your CPA to wipe out your income. Does that answer your question?
Yeah, no, that totally makes sense.
Yeah.
Totally makes sense, but there's always a come around, isn't there, when you go to sell that property? Mm-hmm. Because you've already taken the deduction, so now you're going to get...
Yeah, it's called a recapture.
Yeah.
It's called a recapture. That's why you don't sell it till year 5, because all the bonus depreciation gets taken over a 5-year window, right?
Yeah.
So at the end of year 5, right, all of that recapture is drastically reduced. Do we just drop that on the ground?
No.
Oh, got it. So yeah, that's why you wait 5 years to sell the properties. So that way that recapture back is minimal. Okay. So that's the key to it. Yeah.
So, but when you sell, then you...
But because you waited 5 years to sell it, the recapture amount that you have to take is very minimal. It's not the whole amount. If you're trying to do this and you're selling it in 12 months from now, bad business model. Wait 5 years and then do it. And that recapture back will be minimized. So you won't have a problem of having to have an income, call it a phantom income tax 5 years from now. Yeah, that's key. But yeah, the tax game is everything. But I try and simplify it and just say, listen, what do you pay Uncle Sam each year right now? And they're like, about $75,000. Perfect. So you're going to invest that every year. So it's going to one of two places, Uncle Sam Black Hole or real estate investment. That's it. It's the only 2 options you have. So put it into a real estate investment and you do that every single year. So that way you get a negative K1 and that's going to wipe out your taxes. And once again, depending on your personal setup, that will dictate what type of income you get to wipe out. So for him, because he's married, this doctor guy, right, and his wife has a real estate license, so she's classified as the real estate professional. They joint file together. So when that negative K1 statement, when that comes through for $250,000 negative, he gets to wipe out his capital gains income from investments, passive income investments, stocks, bonds, real estate, any kind of passive investment stuff, and he wipes out his doctor income.
So, but somebody could be, your wife have a real estate agent?
Not a real estate agent, but classified as a real estate professional. So a real estate professional, 2 things. Number 1, you have to spend 750 hours per year in real estate activities. Pretty easy to figure out. It's 15 hours a week. I mean, you can do 15 hours a week on Zillow, right? So that's not terribly difficult. But the hard one is you have to spend more time doing real estate activities versus your other job. So it's harder if you're a single individual that's a W-2 employee and you have to be at your office 40 hours a week, but you're only spending 15 doing real estate. That doesn't work. You see where I'm going with it? Because you're not spending more doing real estate than you are your 40 hours at your job. Yeah. So either way, they're going to get to wipe out. And the simple answer to it is whatever you give me, I'm going to give you a negative K1 back on the year 1. It's almost dollar for dollar. Right? You don't guarantee that because you said it's on average, it's almost dollar for dollar right now because of the bonus depreciation that's set up to whatever you invest, that's what you're going to get back on a negative K1 statement. And that negative K1 statement has allowed you to write off income, right? Now it's a matter of which income do I get to write off, capital gains or ordinary income, because those are the only two types.
Knows if they were going to do it.
Correct. Either way, yeah, the real estate professional status is what gives you the ability to wipe out both types of income. Because if you don't have the real estate professional status, you can only wipe out capital gain.
Is it in conjunction with being an agent and
No.
15 hours a week?
No.
All you have to do is put 15 hours a week to some kind of real estate.
Correct. Yeah, I mean, if you can showcase, reasonably, hey, that I'm driving around looking at this stuff. Obviously, if you have this stuff set up and you can showcase, I have a real estate business and I have all these things in play and like all this, that starts to and you own some properties and you can show, hey, I own these properties and we're doing some management on them and we're doing this. It starts to paint the picture, right? It's easy to sell that to a CPA, to the IRS, to anybody, right? But obviously you can't just make it up because they will find out. Eventually they'll find out. So yeah, question back here.
How I'm gonna try to do it next year, I'll have six properties or 6 doors, and I don't have property management. I'm the property management. I'm going.
Then it's very easy.
I'm going. I'm the igniter. I'm fixing the stove. I'm replacing everything. I'm doing the flooring, the painting. I'm doing all this stuff. So then next year, I'm going to try to file as a professional because I run everything.
Sure.
This is what I'm.
And that would be very easy for you to do. So once again, going back to the types of income, because this is important. So there's capital gains. You get to wipe that out no matter what. There's nothing stopping any of us from wiping that out. But the holy grail, what people are trying to accomplish is, hey, I'm a high doctor making $500,000 a year, whatever the number is, and I pay Uncle Sam $250,000, screw that. How do I wipe that out? Because that's what really people are trying to accomplish. And how you do that is by having real estate professional status. It's harder to do if you're single, easier to do if you're married and one spouse has, real estate license or real estate professional status because you're filing jointly. So now Mr. Doctor over here, because you're filing jointly, you can wipe both out, both. That's the holy grail. That's what everybody's trying to get to. But it is harder if you're single and not married. There's a way around it, right? It's just harder. Yeah. Question here?
The question is, after you decide to sell in 5 years,
Yeah.
you're going to buy another. But what do you do? You just sell the old, sell that?
Yeah, and you sell it in the beginning of the year. So to give you an example, we have a 31 unit deal right now that is in escrow and we're closing January 6th specifically. And because I know the investors, we're going to have almost $1.6 million capital gains event, right? And there's no way around it. And we can't 1031 because it's a partnership. And it wouldn't make sense to do 1031 anyways. But how do we get around that to give all the investors like runway? We close in January. So now you have 12 months to take that capital gains, and rather than give it to Uncle Sam, like we know what that number is going to be. You're going to go and buy another property or invest into another syndicate, get the bonus depreciation for 2026 and wipe it all out. Oh yeah. They all know now, and we have a general idea of what our capital gains will be, generally speaking. Now, once they get their distribution, we'll know exactly what it is. And then, it's on everybody's plate to do their own personal taxes, but we give them guidance saying, hey, here's what your capital gains is likely at. Talk to your CPA to verify this, but now you have 12 months to go figure this out. So you don't have to pay Uncle Sam. That's what you do. You don't close in December. Because you have to do it in the calendar year. That's the critical piece to the whole puzzle. Has to be done in the calendar year that you're having the event. So that's why you always do it in the beginning of the year, so you have the runway. And then you'll technically never have to do a 1031 exchange, technically, if you run the bonus depreciation game, right? It's a very, very, very powerful tool.
If the capital gain event is $1 million, then is that they would have to invest $1 million in order to offset?
The capital gains, if that is the capital, no, if that's the event, what is and let's say they're at a 28% tax bracket, right? So it'd be $280,000. Correct. Yeah, it's whatever the actual taxable income is, right? But the event may be $1 million, sure. But the taxable that would go to Uncle Sam, that's how I always look at it. How do I wipe out that? So you take that 280 and go invest it, because that's what I have to actually go. You want to reduce your taxable income, and that's what you do with that. But honestly, what's amazing, and I've started doing it to test it, is you can go on. I mean, our friend at ChatGPT, as we all use it. I mean, you can literally come on here and I have custom GPTs, right, set up. We have our multifamily mentor one, but you can come in here and we're teaching it right now, the tax game of bonus depreciation. So you can really come much in here and say, you could say, I have a capital gains event from the sale of my 20 unit multifamily building. I am closing in January 2026. How do I wipe out this gain and use bonus depreciation to do it? And then what you'll actually do is when you get your gain and all that stuff and your documents, you can throw it into the system and say, please analyze this for me and give me a tax strategy game plan to wipe this out this year. And it'll go ahead and You do not wipe out capital gains on the sale itself with depreciation. You can offset it, blah, 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 through a new acquisition. So it's giving you two options, right? The 1031 exchange, right? Or cost segregation, bonus depreciation, right? So it's giving you, this is the magic, right? But this is the one you're gonna wanna use, right? With the bonus depreciation. It's gonna walk you through it and just keep asking it questions and prompting it on your specific situation and even your personal tax situation. And it'll walk you through how to do it. It's pretty sick. And yeah, because we've taught it, we put into the AI, that you're the number one tax strategist in the world. So we're giving it the mindset and giving it, hey, you go use all the tax code, because it can read the IRS tax code, which is publicly, online, right, in a second, and take all that, apply it to your personal situation. But the key is prompting it that, hey, I'm going to be, when are you selling? When are you buying? And maybe ask it, hey, ask me some questions so you know my personal situation and can guide me. So you want to almost ask it and teach it exactly like you want it to learn and give you the answers based upon your personal situation. And it'll walk you through it. Yeah.
That was just in conjunction with that. You ask you
questions. Yeah. So that way it can give you the proper answers, right? It's almost like you're asking it to prompt you. Correct. But yeah, this multifamily mentor is, we're getting it, but yeah, the tax side of it's a critical piece to the puzzle. I mean, that's why people invest in real estate is, cash flow is great, profits are great, inflation hedge is great, but man, if I can wipe out my taxes in the process of that, let's go. I mean, why else would I do it? Because it's not about the money you make, it's the money you keep. And we all know that. It's the game of how do you keep the money and keep that money moving in your pocket versus, our friends at the IRS, who we all know, we don't know where that's going.
Is the capital gain agnostic? In other words, they'll stock and you do that capital gain?
Everything. Yeah, so once again, there's two types of income. Capital gains, which is any kind of passive investment type stuff, stocks, bonds, trades, anything like that, crypto. That's all investment style, passive type income. And then you have your ordinary income from your JOB. And so that's the two types. So the holy grail is how do I wipe out both, right? I mean, that's what everybody's looking for. So, unless I'm already a real estate professional, so I'm 1099, I'm not W-2'd. So because of that, I can wipe out both anyways. But obviously, if you're a doctor, an attorney, somebody that's going to a job 9 to 5, sitting in an office or working for the man, as they say, how do I wipe out that income as well as capital gains from investment? Because that's the big question everybody asks, and that's how you do it.
Sell, acquire.
The property. So you do, so the process for how this works, you close escrow and you buy a 15-unit apartment building, right? Within the first 30 days of owning that building, you're doing the cost seg study. It's done by a third-party company. They're all the vendors, they're in our system. You have 3 of them in there, and they'll do the cost seg study. It'll run you a few $1,000s on the property, but that's for the benefit of you and your investors. It's going to give you a report. It's going to show you exactly the amount that you get to write off, right? Now and for the next 5 years. And so you'll then take that report, it goes to the CPA, and then that's what they're going to use to then apply this bonus depreciation to all you and the investors. And that's going to give you the K1 statement to then go give to your personal CPA.
Cash flow period and the capital event.
Yep, it's used for all the above. Because you'll get one every year, because you're going to file tax returns for the LLC that owns the property every single year. And your investors get a K1 statement every single year. And it's going to show this loss every single year. So even though it's a paper loss, it's not a real loss, it's a paper loss, but that paper loss is able to be used against actual income. That's the beauty of it. So when you do bonus depreciation, what you're doing is taking 39 years on commercial property, if I'm not mistaken. Is that right? Does anybody know? Yeah, so it's 27 and a half on residential. I think it's 30 something. I could ask it, what is the normal depreciation timeline for commercial property? I think it's under normal code, UCC code. It should say, I think 27 and a half for residential, but I want to know commercial. Commercial. Oh, is it still going? It's giving me example. 39. Okay, so I was right. So 39 years for commercial. So rather than depreciate that asset over 39 years, which is standard straight line under accounting rules, you're condensing that, right? Hence you're accelerating that depreciation over 5. So that's what happens. Under IRS tax code 168K, IRS tax code 168K, this is what allows this to happen. So you're taking it from 39, condensing it to 5, accelerating that. The most of it comes in year 1, and then you still get 2, 3, 4, 5. So that's why if you wait 5 years and then you sell the property, that recapture that you're talking about is minimal. Yeah, you'll get to a point you have no recapture. But trust me, the recapture event is far less than the benefit. Otherwise, people wouldn't do it.
Now, the cost study structure.
That's the best type.
So you want to do it while in that process as opposed to once the reno is
No. Once the reno is complete is actually technically the best time to do it. Yeah, because now you're going to have all these improvements added to it that now you can cost segregate, as they say, and accelerate that. Yeah, so technically, yeah, if you're doing a huge construction project, you wouldn't do it on, like we're going to go see this project today. I would not bonus depreciate this little 2-bedroom, 1-bath house you're about to see. You're like, holy cow, 1923 house, right? No, you build the building, then you do the bonus depreciation. Yeah, because you're going to have a big number on that one, small number on this one. Yeah. And when you go to the cost seg companies, the cost segregation companies, they can run a pre-report. They'll give you an idea of before you hire them, right, for free. They'll run the analysis on the building. They will give you kind of a pre-report on what will likely be. So that way you have an indication before you close escrow. So this is all done in your due diligence process. When you're in escrow in the contract, you can go to these guys and say, hey, here's the address, here's the information. Can you give me a pre-report on what it looks like? And I could even pull up some of the reports. And they'll tell you, yep, you're gonna be able to bonus depreciate about, $2,777,000. And year 1 will look like this, and years 2 through 5 will look like this. And that way you have a game plan, so then you can apply that to your financials. And then when investors ask you, hey, what are you expecting for year 1 bonus depreciation? Oh, it's gonna be about this, which means if you invest this, you'll get this. And they'll give you a good idea. And it's almost a 1-to-1. It's gonna range right between about 95 cents on their dollar to like 1.2 cents on their dollar, right in there in terms of what they get to write off for year 1. Yeah, so no different than I was saying before, but so it's all done through a K-1 statement. So that's the IRS document that the LLC produces for every investor. And when you file tax returns on that property, which you'll do every year that you own it, that paper loss, that K-1 statement is the paper loss. And it just shows it on paper, what you're losing. That is what you get to transfer to your personal CPA to do your personal tax return. And they get to use that document. They plug it into their little calculator things and they apply that appropriately. That's why you always want to talk to your CPA too and let them know, hey, it's tax strategy game is what I call it. And most CPAs are not tax strategists. They're just not. They're not designed that way. They're not taught that way. They're taught to take it, put it into their little computer system and pump out the documents and send it to the IRS. That's what they're there to do. They're not there to think through your personal situation and provide a tax strategy plan for you. Some are, right? So Matt Boehm, who came on our 3-day event, he's both a CPA and a tax strategist. He's in the community for all of you guys. And you saw he came on there speaking and he's a sharp dude and he's very, very, very good. So he's a rare one because most are not. He can actually take your situation because he's in real estate too. He's a CPA, so he has this company called True Books. But then he understands the tax strategy game where he can look at your personal situation and then apply it correctly. And most people who are making enough money, and it typically doesn't start to play until you're probably hitting or seeing income come in from real estate and all these types of things of probably 250,000 or more, right? Is where it really starts to play. Because then you're probably going to start tax strategizing around Q3 of the year, right? Because you're planning and you want some runway. So you start talking to your CPA and these people, your tax strategists, right around September, October of that year to say, hey, what's my taxable event for this year? Okay, I know I'm going to have to pay right around 200 grand to Uncle Sam or whatever the number is, 50 grand, 80 grand, 100 grand. Okay, how do we avoid this, right? How do we avoid this? And then they start planning ahead to say, okay, well, dude, you need to go buy some real estate. That's probably what they're going to tell you. You need to go invest into a syndication. So that's why we can raise a lot of money towards the end of every year because we have a lot of people saying, dude, I need to get this money moving, or it's going to Uncle Sam or it's going into real estate. I have 2 options. So obviously the real estate one is the better one. Oh yeah. Especially if we send something out, because we have our fund now, right? And that's a revolving kind of pooled fund where people can invest into it on a continual basis. And then we'll apply it to our deals and stuff. But we're getting that bonus depreciation on a yearly basis for people coming in and out. Yeah. Yes. Yeah. So like from an asset protection setup is my trust is the member of all of the stuff. So from kind of like a flow chart, so everyone understands a flow chart, your holding company that all of you have, right? So that's the main investment holding company. A lot of your assets and stuff you own should be held by that holding company. And then that holding company is owned by a trust. That'd be the correct way. Right, and it's going to go to you personally anyway, so you can't really hide from the tax because the way the money flows, it's based on where you have residency. Okay, so at the end of the day, right, let's say money comes in from an apartment building, goes to that LLC, then goes to your holding company, right? But then you reside in California, right? It doesn't matter. So that's the company level income, but it all passes through because these are all LLCs. It's a pass-through event. That's all it is. So at the end of the day, it's still going to your personal income taxes in the state in which you reside. Yeah, so that's why I'm setting up residency in Nevada. There's a great app called TaxBird. It'll track you. So that way, because you don't have to be in a specific state 51%. I just need to be out of California 51%. With the amount that I travel, if I can just show that I'm out of California 51% of the time, then we're good. We're good. And then you establish residency. You have to establish residency. So I have to get a license and stuff in Nevada. But they have no state income tax, you know? Yeah, we use QuickBooks for everything. It's good. It totally works. So all of our LLCs, our holding company, everything is in QuickBooks. And then we have a bookkeeper, and then we have a CPA. So the CPAs and the bookkeepers are all in your vendors list in the back end. Yes, it is not Matt, but it may become Matt. He's pretty good. Or I'll just use him for tax strategy. Because that was the first time I'd actually gotten. So he used to work with Ryan Pineda and a couple of these other kind of real estate influencer guys, but he's very sharp. And now he's off on his own, doing his own gig. But very sharp guy, as you kind of saw. I was impressed. Yeah. Have you heard from him at all?
I remember the number.
Yeah, I don't know. I mean, I guess it just depends on what he's doing and what he's handling. Because I don't know that I would need him to do tax returns per se. But if I needed tax strategy guidance, would I pay him for a couple hours of his time? Sure.
We had Zooms with him twice.
Yeah.
And he has programs, one's 4,000 a year.
Okay.
And then meet with twice, one's 8,000 a year.
All day long.
And then the filing taxes, he wasn't.
Got it. For $4,000 to get proper advice to avoid hundreds of thousands, that's a good ROI. Got it. Yeah. So that's, I mean, that's reasonable. That's reasonable to have 2 meetings, probably in an hour each, I'm guessing. Yeah. So 2 1-hour meetings a year to go over your specific tax strategy. Obviously, you need to have your stuff there's probably some prepping right before these calls. So that way you have everything ready to go. But yeah, there's probably some review and stuff in there too. But yeah, if he can look at your specific situation and give you the guidance to save you hundreds of thousands of dollars, yeah, for $4,000 a year, sign me up. Yeah, all day long. Yeah. No, so most of the LLCs get set up in Wyoming. Now, we set up our holding company LLC in California many years ago, so we haven't changed that. That's fine. But everything else is set up in Wyoming. They do. Yeah, Wyoming is the best out of all of them. And then you can hide yourself better in there if you choose. But keep in mind, if someone's going to sue you, what they're really after is the insurance money. That's really what they're after. They're not really after you. They're after like something happened, a big event. I'm pissed. I want some money. That's why you have insurance and you put an umbrella policy in place. So every single one of your apartment buildings will have 3 insurances on it. You'll have your property insurance for fire and blah, blah, blah. You'll have your general liability policy that's there in case one of your residents falls and kills themselves. And then you'll have an umbrella policy that's above all of those for a couple $1 million. And that's going to protect over everything. So that's like if they break through the property and they break through the general liability and they're like, I want more money, that's what the umbrella is there for. And that's on literally a property by property basis. And then if they break through that and they want to come after, your holding company up in Wyoming, you're going to have an umbrella policy on that one too. I mean, so trust me, by the end of the party, they're going to have millions to go after if they really want to do it. So that's before it ever gets to you ever personally, right? They're just after the money. And, unless you're completely negligent and you did kill somebody, they're usually not going to break through the property level. Very, very rare. Very rare. I mean, I haven't ever had that happen, knock on wood. I haven't ever seen anybody have that happen. But you'll have property level insurance that protects you and everybody. Then you'll go to your LLC holding company level and have an umbrella on that. And it's cheap. It's not expensive stuff. Cheap to get these umbrellas. And then beyond that, you could even have a personal umbrella policy, which I have, just a personal one. For, I don't know, gardener comes over to your house and hits himself with a rake and falls over and dies. I mean, I don't know. Who knows these days, you know? And then and then he wants to sue you because you asked him to come over. I mean, who knows, right? And then but it's cheap stuff, you know, to have the umbrellas, and that just covers you on a personal level. So there's multiple layers to where you don't have to go hide yourself. I mean, unless you're doing something nefarious, you know, you don't really need to be some secret, you know, CIA agent behind all your companies. You just need to have good insurance that's there and, you know, try and do the right thing if things do go wrong, which inevitably they will. There's insurance brokers. So in your back end under the vendors, there's the property insurance brokers. They're specific to property insurance, but yeah, there are a few in there. 2 ways to get good insurance. Number one is when you go to buy a property, whoever the current insurance provider is on that property, you'll want to find out who they are. And that's a possible use when you buy it. That's option A. And the other one is same thing with brokers. I would ask them, you know, no different than the lenders and the property managers. You saw yesterday when I asked the broker, hey, do you have any other property managers in the area that you could refer me that maybe other clients use in their properties? Yeah, I do. I can send you a few, but I try and be tactful with that. Cool. And she sent me an email, by the way, that has everything in it. And then, hey, do you have any lenders that would finance these things that I could speak to as well? Absolutely. Here's a couple. And then I'd ask again, hey, what kind of insurance companies are, you know, insuring these properties up there? Do you have any that locally you can refer to me? I have maybe a couple of those too. So the brokers will be your gatekeeper to a lot of that because they're in it every day. They have all their clients and they know who all their clients are using. So you might as well at least get a few referrals and use the brokers for those referrals, build a little team local in that market. And then sure, we provide the vendors too. So it's kind of one of these games like teach you how to fish, but then give you fish too. So that way you have both sides of that. But yeah, it's very important stuff. So, I mean, I use this almost every day coming in here because it's getting smarter and smarter and smarter. I found out so we cloned my voice, by the way, using 11 Labs so we can clone myself. So that way I can actually talk to you down here. The problem we're having is OpenAI right now is being very careful because I found this out the other day because I'm like, why can't we clone it and put it into our custom GPT that we've created? And like, well, they're worried about deep fakes right now. And they're worried about people faking you and then security reasons. Because if you clone your voice and you put it up here publicly, now some nefarious hacker guy could technically come in here, use that. Now it's your voice. They could go on to any voice recognition things and start stealing your identity and doing all kinds of other things and do some crazy stuff too. I don't know that they care much about me, but that's the point why they haven't just blanketed allowed everybody to do it yet, because they are concerned about opening that up. Because then imagine they're already allowing you to clone. That's why the body clones right now, because we're trying to actually do an AI twin basically of me, and it's pretty good, but it's still a ways off. And there's a reason for that. They're really careful about this whole deep fake problem and people literally cloning you. And it literally looks like you. It's crazy how good this is getting, but it's scary at the same time because if they can clone you and clone your voice and now be able to use that, it's not so much the general public, but you got some, bad actors, and you could even bad states, bad countries, bad things. And they're very concerned about that, which is why they're holding on to it. And if you go AI clone yourself, and I've tried 14 different ways, no, it's not quite good enough yet. They're not going to let you get it exact. They're being very tactful with that on purpose right now. So just FYI. But yeah, because I want to get it to the point where you could literally pull up chat on your phone using the custom GPT. You could be in front of a property and you could say, hey, Justin, can you walk this property with me right now and tell me what you see? And I'm going to, and because of the VR, because now we have Meta glasses and then we have oculars, right? But it's going to go to the contact lenses that I've been saying. And you're going to have it. Everybody's going to wear them at some point. And you'll be able to literally get out of your car, walk anywhere, and I'll be standing right with you just like I am now. And I'll say, hey, actually look over here to this and take a look at this and pay attention to this. Let's go inside the units real quick. Let's take a look at these. Oh, pay attention to that. And you'll ask me, what do you think it'll take to replace this floor? About $10 a square foot or blah, blah, blah. And we'll literally be there with you. It's going there. It's totally going there. So I'll be with all of you 24/7. You'll never get rid of me, ever, for the rest of your existence. I'll be sitting on the couch in your house, okay? So, but yeah, because it's headed that direction. Because the first thing I said is, hey, how can I get myself to pop out of a phone as a hologram, right? That was the first thing I thought. And then I talked to this AI guy and he says, well, you can't because the hardware is not in the phone. So they can't, and Apple's not doing that. So it's not going to happen. But with AR, augmented reality, it's already here. Now it's just a matter of the technology is going to continue to improve. And because of 5G wireless and all the stuff they're building with the data centers and the speed of everything that's coming, yes, it is there. It's there now. It's just not at the point where you can literally pop out yet, but it's coming very, very quickly. So that'd be pretty cool. Pretty cool. So what I want to do, I want to call some brokers too this morning again, but I wanted to walk through that. Does anybody have any questions on this before we finish this up and kind of the purpose? I think everybody's understanding of that now, why it's there is the roadmap visually. And then behind that, right, there's about 10 pages of detail for each one of these points that give you a checklist for each point. So that way you can kind of follow that and trace yourself back. Because when we were talking to you and everybody else, sometimes, I'm doing this right now, but I haven't done this. So it allows you to go back if you're getting out of whack and find yourself back in that process. So you can track yourself. I think you were telling me that too, right? As you were saying, yeah, I get into the list, I start doing it, and then I forget where I'm at, and then I don't know how to go back because I can't visually see it. Right, correct. Yeah, because we know that this process works. And because every single person that's followed this, they get their deal. They get it. And so the key is just staying in this process and staying consistent with it. And then what ends up happening with a lot of folks is they'll get right between here, like 3, 4, and 5. And this is kind of where people will get, I wouldn't say stuck, but they're, revolving in this, right? Until you get to the point of boom, the deal gets locked up, right? Because you're here until that deal hits and you're, analyzing, finding, writing offers, right? In that process and that cycle until that first deal hit. Let me show you guys you guys saw the websites.
Hello, this is Alan Larson. Leave me a message and I will get back to you shortly. Thank you.
Hey, Alan. My name is Justin Brennan. I'm with Brennan Pulley Capital. I was actually calling on your 24 unit there in Oklahoma City. I know you have a few other ones as well. Just want to get some information on that one. I know it's been on a little bit, and then you have some other properties around it. Yeah, definitely looking to buy in the Oklahoma market. And your name came up on this one. So I thought I'd reach out to you personally and see if you have this one or some other deals we can take a peek at. My cell number, 619-823-2120. That's 619-823-2120. Chat soon. So I do that. And then, so we're not going to call him. Let's go back to Oklahoma. Let's call on this little 12-plex maybe. So this one's, 3 days ago. Cool. Brent with KW. Hey, Brent. All right. Let's see if Brent will have a conversation with us. Yeah, 405-948-500.
It's a great day, Keller Williams. It's Hannah.
Hey, Hannah. Is Brent available?
Holiday?
Yeah. I mean, is that his last name? Yeah. Yeah. He's got a listing there in Oklahoma City that I'm interested in on 735 Northwest 30th.
Perfect. I'll transfer you over to him.
Okay. Thanks. Cap rate of 4.3. I wonder if this is more of a development play. It's possible for that price point like that.
This is Brent.
Hey, Brent. My name's Justin Brennan. I'm actually calling on your property there at 735 Northwest 30th there in Oklahoma City.
Yes.
Yeah, I was trying to get some information on it. I saw the price and stuff on it and all that. Is that a sale of just the apartment complex? Is there more of a development play and stuff going on there? Just curious.
No, just the apartment.
Okay. Can you tell me a little bit, I guess, about that and I guess the reason for the seller selling? Or I was just looking at the price point and the cap rates and all that for Oklahoma City. It seemed a little bit off, so I wasn't sure if there was something specific I'm missing there.
It is, and it's low. We have a low cap rate on it. This is what I need to do though with you in order to release in for any info.
Yeah.
Can you text me your email address? I'm going to send you an NDA to sign, and then I can send you the whole financial packet on it.
Sure, of course. Yeah, and then not a problem. I can do that. What is the main reason for the seller selling? Is he owned it a long time or?
Just an investor.
Okay. In I guess the financial support, the values and stuff.
Yes.
Okay. Who's financing does he have financing on it currently, or is it a free and clear?
He's got a note on it.
Does have a note. Okay. Yeah, I'm just curious. Are there local regional banks there that are financing a deal like this right now?
Yeah.
Okay. Who do you normally go to, or who do your other clients go to?
I use some local Oklahoma Fidelity. I use First National Bank of Bethany. I use Citizens Bank.
Okay, Citizens Bank is there. Great. Okay. Yeah, I'm just trying to get an idea, I guess, from the financing side too, for a smaller complex like this. From local regional banks are going to be the main players.
Sure.
And then is he managing it himself, or is this third party management?
He's got a manager that lives on site.
Got it. Okay. And does he just give them a unit or something, and then or reduced rent?
Yeah,
or?
they also handle all the leasing.
Got it. Okay. Interesting. Yeah. Cool little property. Yeah. I don't think he hung up on me. I think it went dead. Oops. I don't know what happened there. Okay. Well, I'll send him a text. Yeah. I mean, they're smoking some good whatever they're smoking. I mean, Oklahoma, I didn't see that for a second, but I mean, come on, guys. That's not even, obviously, it just doesn't work. Very interesting why he's trying to sell a 12 unit for 2.3. It's almost $200,000 a door. Am I missing something? He does realize you can do like San Diego, California and find something. I mean, not a good area, but I could find something in San Diego for $200,000 a door. Why in the world would I go into the middle of the United States of America? I mean, I don't know. I'd like to meet that owner and see what they're on. I want some of that. Yeah, what mushrooms are you on, buddy? I want some of that stuff. All right, well, let's go to another one real quick. One more. Yeah, because everything is going to be at a 6.5 cap or greater. Like this one, even though it's a portfolio, but you can see, I mean, a lot of days on market, but I mean, they're playing ball, right? They're at a 6.3 cap, at least on what they're saying. And then, it's Alan Larson. It's our same guy. He's not going to answer the phone though, but we'll try if it's the same Alan Larson. But nice property, whoever did this. I mean, they did a decent job. Oh, wow. There's a shed on site too. Yeah, they did. I mean, it's older, some older, some newer. Interesting. I'd be curious what all this stuff is. Yeah, it looks a little suspect, but I think, these are the ones he's got all these properties. These are Alan Larson's properties. So this is one of them. I'd want to go back to, does it have the address on here? Where's the address at? Yeah, it doesn't, it's just a portfolio. Okay, got it. 7 locations, got it. So that's what.
Could you go to the guy that email on so we can ask him about the symposium?
Sure. What's the address? It's Oklahoma? Oops, gotcha. 51 flats, that one. Okay.
Yeah.
This one here.
96 units, file, built 70, 93.8.
No, they usually won't, because I should be able to go to Crexy and pull that up and put in the same address. So let me try here. But you have his number, because it's not pulling up. So, and it's on the market or it's not on the market? Okay, so it's maybe a pre-market deal. Yeah, let's try their number, Ryan. And it's 90, how many units? No price. And it just says now for sale. Okay. And it's in Tulsa, Oklahoma. His name's Ryan. Okay.
Hello?
Hi, Ryan?
Yes.
Hey, Ryan. My name's Justin. Calling on your guys' listing on your website for the 90-something units. I think is it called 51 flats or?
Yeah, can I give you a call back in about an hour?
Sure thing. Yeah, can I give you my cell number?
Yeah, is it the 619?
823. Yeah.
Perfect. What's your name?
First name Justin.
Okay, I'll give you a call back in about an hour.
Okay, thanks. Jeez, what the heck, man? Sounds like he's going to the bathroom or something.
Very professional.
Well, no, he's either running into a meeting, something's going on because he's all shuffled. I want to get one other good one here real quick. Hold on. Well, he answered it. He did answer it. Yeah, he did answer it.
Interesting to see like the level, different level. Top tier to like some of these, other people.
Come on, babe. Let's go.
We need another Beth Rose.
Yeah, we're gonna get it. Oh, Northmark, these guys should be good. One of these two guys will answer. You flyer, blah blah blah. Request info. Wow, a lot of days on market. Updated 39 days ago. 126 units. Okay. Yeah, so they're holding it tight here. These probably not gonna give me too much info until I sign some stuff. But let me see the map. Let's get a feel. So you can kind of see this one. I mean, I don't care that it's next to the freeway. That doesn't bother me at all. But either way, good. So you abut all the single family. That's nice. All this stuff back in here. Looks like a school. So that's good. Yeah, good little pocket. Don't know what that is across the way, but that looks fine. Nothing crazy there. If that's a church, that looks like a church. That looks like a church. I bet that's a church. Come on. There you go. God is good. Right there. See that? God is good. And there's your apartment complex. Yeah, and I all cool with this. These power lines are fine. Yeah, nicely done. This is a nice little complex. Good little location. Right off the freeway, so that's fine. It's all fenced in, so you see that, just basic, nothing sexy on security, but it's there. It's there. Nice and clean. Woodward Place. Let's see what Ethan and these guys, if they'll talk to me. 918-851-8223.
Your call has been forwarded to voicemail. The person you're trying to reach is not available.
Let's see if we'll get another one. Come on, Ben. Come on, Ben. Come on.
Hi, you've reached Ben Davis with Northmark. I can't get to my phone right now, but if you leave me your name and number, I'll get back.
Okay, let's try one more for the love. Let's do, maybe they'll pick up. Smaller little mom and pop, Horizon Brokerage, Nicole and Spencer. I'm feeling good about this one. Feeling good. One more here. 3992 for Nicole.
Hi, you've reached Nicole Mace with Horizon Commercial Real Estate. I'm not able to take your call right now, but leave a message and I'll call you back as soon as I can. Have a great day.
All right, we'll try Spencer and then we may be, she just said she'll call me back in a few minutes. We'll see. Let me talk to Spencer first. 7481.
Hey, sorry I missed your call.
Or not. Well, let's see. Maybe she'll call me back in a minute. So we'll wait for that. Okay. Sure. Do we have, are they in Oklahoma City or, okay. Do we know if they have anything listed at all or no? Because I usually always try and, oh, okay.
He's on Dick Pocket.
Oh, gotcha. Yeah, what's their number? Let's just see if we can.
405.
We'll just see. He's in Oklahoma City? Okay, let's see if he'll, let's act like I'm a curious investor.
This is Zach.
Hey, Zach. My name's Justin. I actually was referred to you through a buddy of mine on Bigger Pockets.
Yeah.
Curious, I'm looking I've been to Oklahoma City a few times. We do stuff in Texas and some other markets, but I'm looking to invest in the Oklahoma City market. But wanted to reach out to, I guess, a knowledgeable broker, and we're in the multifamily space, but the smaller space, I'd say. So anything kind of in the 10 to 30 unit range. Just thought I'd reach out to you and introduce myself and see if you have anything you're working on or know of anybody that's working on something in that space that we could start to take a look at.
Okay. Super stuff in the 10 to 30 unit.
Yeah. For the first kind of one in that, 10 to 30. I mean, maybe up to a 50, depending on the price point. We're trying to stay, under, 2.5 to 3 million on a price, so that way the capital and the capital raise and stuff is reasonable.
Okay.
So that's kind of it's really more of a price thing than a unit thing. But but that's kind of what we're looking for. And see, you're in that market now.
Yeah, we're in the Oklahoma City market for sure.
Okay. Do you work in the multifamily space or more single family or both?
Right now, I've transitioned personally more to our managing broker, and I've got a couple of my guys that do a lot of the commercial and multifamily.
Okay.
So what I would probably do is get you in touch with one of those guys. A couple that work pretty closely together to put some of this together. But we've got some more commercial coming up, but I don't know if we have any. We just helped a few guys buy some properties like that.
Yeah.
I don't know if we have any we're going to be putting on the market in the next little bit, but I know a couple of those guys have been going down that same exact search, so they probably have some stuff that's not active out there yet in their back pocket.
Right. Yeah, I think it's just making the connections and at least knowing you have a buyer that's looking for stuff. So if you come across it,
Yeah.
Okay.
Well, let's see here. Justin, the phone number I've got for you is 619-823.
That's correct.
Okay. What's your email address?
It's Justin, Justin, and then Brennan Poley. I'll spell that for you. It's B as in boy, RENNAN, and then Poley, POHLE.com.
POH.
Yeah, POHLE.com. And so 10 to 30 unit type stuff, but it's really about price point. So, staying, if it was $2.5 million property, trying to keep the capital raised, because we syndicate our money, like we'll bring in 10% ish, and then we'll raise 90% through our partners and stuff that we have teed up, and typically finance through a local regional bank there because they'll focus in that space. So if there's any referrals you can make to me on the local kind of regional banks would be helpful.
We got a couple of those we recommend for sure.
Yep. And then are there property managers that other clients use or have used in that market that you wouldn't want to kill after the first week?
I'm going to be a little biased. We got tired of referring people out and wanted to.
I know. Well, most brokers do because they burn you. So I don't blame you. But yeah, if there's a list, and then we could vet ourselves. But if there's a list, and then we'll do our own vetting.
Well, that's kind of where I was going with that. Was we started our own.
Oh, well, that works too. Okay. All right.
Well, it's going to be very short, but it's also very biased.
Okay, that's fair. So we'll just vet you. That's good.
There we go. There we go. Yeah.
Okay.
We do that a lot. We do that as well. So tell you what I'll do, Justin. Let me get you in contact with either Sam or Matthew. I'll get these notes put in our system and have one of them reach out to you here shortly to kind of learn a little more that class of property you want, your timeline, things like that, and see if those guys have anything coming up for you.
Okay. Yeah, and then we'll probably be coming into that market in terms of actually physically coming out there sometime in early January. So when we do, we can set up a meeting and at least meet you guys and get belly to belly.
Love that. So I'll have one of those guys reach out to you, get the kind of the process started. In the meantime, we'd love to get together face to face next month.
Appreciate it. Thanks so much for your time picking up.
You as well.
You too. Bye. So basic little simple call to start. But you see how I was kind of leading in because I know I wasn't pitching on a certain listing. So I was just introductory call, saying who we are, give a little bit of information on what we call our buy box, right? 10 to 30 unit deals. But in Oklahoma, because the price points are probably $50,000 to $80,000 for a unit, I can buy more, right? My dollar is going to go farther. So I could go after a $2.5 million property, which is probably going to get me 50 units. Yeah, that's a rare one. That I don't know. I'd have to look at the financials on that. But no, most of the stuff in Oklahoma City, if we're really going through it, you're going to be somewhere between 50 to 100,000 a unit on average. Yeah. So your money will go farther So even if you're buying some at 80,000 a unit, you can get up to $2.5 million and take down a 30 unit, 40 unit pretty easily and stay within that range of capital to where you're still raising under $1 million on the raise, but then you're getting more units and the economies of scale. The key in Oklahoma City, in kind of my knowledge there, is because, yeah, sure, the incomes are lower and all that stuff's lower, but it is growing. But yeah, your pockets and neighborhoods and where you're at, you want to be just very tactful with. And from my understanding, in kind of driving there and being around there a bunch of times, you want to stay as urban corridored as you can to where all the jobs and the centers and the population growth is at, because the more tertiary you get, meaning further out in rural, yeah, your cap rates may look great on paper, but there's really two main areas, Oklahoma City and Tulsa. And you need to be near those cores, because when there's a recession, everybody's going to flock to the urban core. And Oklahoma City has a lot of banking, churches. I mean, you drive there and you're in the urban core in the good pockets, you'll see a church, a bank, and a weed shop on a lot of corners. But the churches and the banks are the good one. Those are the good ones. But yeah, you'll see a lot of that, and it's growing, man. I know they were trying to build, I don't know if it's still the case, I have to look it up. There was a gentleman out of California that was planning to build the tallest building in the Western Hemisphere in Oklahoma City, taller than the one center in New York City. I don't know why, but if you go there, they have gorgeous glass buildings. I mean, it's unbelievable. The skyscrapers in downtown Oklahoma City are unbelievable. I would have never thought it, but it's a major banking institution in the United States, which is why there's a bank like on every other corner next to a church, and skyscrapers that are just glass, and they're beautiful. Like, they're striking, So I was very impressed with the core area of Oklahoma City, staying within the core and then maybe a few miles outside of it, of the main sectors, and staying you don't want to go too rural or tertiary, because it's very easy, right when you get outside of the core, it's farmland. Like, it's just flat and it goes. So you want to stay out of that and stay core. Even if you can pick up stuff in the urban areas around because they have, 3 major universities. You got the Hoosiers, that's 25 minutes south of downtown Oklahoma City, right? Oklahoma. And then you have OKC, Oklahoma State, sorry. That's right in the core of Oklahoma City. So you have those 2 major institutions, and you have a lot of law centers when you drive in downtown Oklahoma City, a lot of law schools, all that stuff. So I was impressed. When I drove around, I was like, this is not what I expected of Oklahoma City. And it's clean. The airport's clean, you drive, it's clean, everything's clean. I didn't expect that. And of course, there's bad areas, but there's really some good areas too. And stuff's relatively cheap. You just want to be in the pockets that, the demand's good, everything's good, people are there, there's jobs. Because the minute you get outside of that, it can get rough pretty quick. I love Kansas City. We're in there now. I love Kansas City. It's growing. It's getting pricey. As it's getting pricey.